Greetings, traders, colleagues, and friends. My name is Yaroslav Burchenko, and we have a very interesting stream for you today. Today is Mad Money Mondays, and we're going to be going through what happened over the weekend, what's going on right now on the US stock market, what's happening in the world, and what we can expect in this crazy, fundamentally filled week ahead. So like I said, my name is Yaroslav, and let's talk about what happened Friday. I'm sure all of you have heard already that Trump has finally gotten rid of the government shutdown. It took a whole 35 days for him to come around. Now, the whole premise of the shutdown was that Trump demanded $3.2 billion to build a wall between the United States of America and Mexico. Of course, Parliament denied that motion, and Trump said, fine, I refuse to work. Me and my government, we will not work until we get what we want. So basically, this whole procedure really undermined him as a president, and still he had to come back and, come back to work. 35 days, that's a record. In the United States, the longest that has been shut down was in Nixon's time, and I think that was 11 days. So Trump set a new world record. I'm not sure how good it is going to be for him. We can already see that on Friday, the movement was very small. Here we have a graph of the S&P 500. If we zoom in a little bit, this is a daily graph. We can drop down to an hourly time frame. And we can see this little bump came after the news, and this is today's opening. So we are right back in that consolidation zone, and there are a few risk factors that are affecting the US. I want to take a brief moment to ask if you guys can hear me and see me. I'll double check and we'll continue because there's a lot of interesting things that we need to discuss. Sadaf Banu, hello. Good to see you, sir. All right. So actually, I'm going to drop this down because you guys can't see that, can you? So here we have the this little bump right here is what the reaction was of investors to Trump reigniting government functionality. Let's see how this affected the 2-year bonds. Here we can see the dollar index has really shot down. So Friday was a very difficult day for the dollar. The dollar shows more volatility actually today before a very fundamentally full week. Let me just read your guys' chat real quick, that you guys can hear me and can see me. Perfect. So here we got US Treasury bonds. What we see right now are the prices, and it has been a slow downward trend. Friday's reaction was really insignificant. What I'm trying to show you guys today, that despite all of the interest around this topic, this risk issue, not a lot really happened, and this shows how heavily investors are bearish on the current securities market. Another thing that is a market theme is the Eurozone GDP updates. It's coming out this week. Let's take a look at the calendar so that we can tell you. So on Monday we have Draghi. This is all in. What language is this? I'm just kidding. This is in Russian. Let me see if I can change it to English. If not, so I'm going to teach you a few cool things today. First of all, let's start with the Eurozone. So today we got Mario Draghi coming out and discussing a little bit about the Brexit issue and a little bit about GDP that's coming out later on in the week. The euro has been going in a sideways downtrend. Let's graph this out a little bit so that you can have a better understanding. So as you can see, we are standing at a very interesting zone. You see how we're in a downwards channel, but we have not reached the bottom side of the channel in over a quarter. That's a sign that the euro is at a very strong resistance point. Here we can see a very strong resistance point that we have hit once. Here we have once, twice, 3 times, 4 times, 5 times. Haven't come close 6 times. I think that the reaction that we have, whether we break out top or we break out bottom, is going to be this long. Now this is standard. Let me make this a little bit clearer for you and a little bit thicker. This is standard technical analysis. When we break out, we're going to break out about that much. So you can expect a whopping 300 points, around 300 points, whichever way we go. Right now, this is a flat. We're at the top of the flat and in the middle of the channel. So as a trade opportunity doesn't present itself here, but we have other very interesting market themes that we can turn to. I would like to talk about Great Britain's Plan B. That's a more soft Brexit that's also going to be voted on today, and Mark Carney is going to give a few, is going to say a few words about that. Now let's take a look at the crosspair. Now this pair looks a little bit more interesting. First of all, we have a huge channel that we've been working on because both the Eurozone and England have been going through some things. So here we are in the middle of this channel. This huge sell-off was the strength that we saw in the pound. Now, fundamentally, that is due to the fact that in all probability, Brexit is going to go through smoothly. We have to kind of cancel out the noise that we hear from all the news agencies and take a look at facts. Now, the Eurozone and Great Britain are two of the world's superpowers. Obviously, they're going to compromise in order to reach a mutually beneficial agreement. So the fact that we may have a negative outcome is very little. So a second referendum is very little. As we know, 2 weeks ago, May won her no confidence vote. So she's okay to be prime minister for another year. Also, we have her government, which barely, but also won the no confidence vote. So that means that they're staying in office. The European Union has multiple times said that they are working very diligently, and the things about a border with Scotland, in the grand scheme of things, is trivial. So they're ironing out the kinks. March 25th is the due date of that agreement. We are looking forward to it. This is definitely a currency pair I want to watch. As you can see, this local level has been pushed through, and also We came back a retrace to it. Seeing, if you have time, listen how Mark Carney describes the situation. It's Carney today, right? Yeah, so Draghi and Carney. And I would even say if a spike returns to 87, 0.87 per euro, I would make a very short-term sell from that position. So if we mark our graphs, if we come to this line, this would be a good opportunity to short with a very tight stop loss. Now let's take a look at the euro dollar. We see that it had a huge day of growth yesterday, and actually that is a consumption candle. You see how that green candle consumes totally the body of the red one and then some. That is a strong technical indicator of an uptrend, so the euro most likely will continue up into this area here, whereas the pound is also showing strength, and it is not slowing down, but the pound has reached a very critical support level. I also want you to pay attention when you compare these currencies where they are in relation to each other. So this is a very strong support level, or sorry, resistance level for the pound. So going back to our original trade idea, we would definitely have to wait and see how the two currencies interact. But from right now, what we see, because the dive has been so strong in the currency pair, we may have follow through just from that area, but the pound may reverse and the euro may reverse as well. So let's take a look at fundamentals. That's what we're here for today, planning our week ahead and looking at fundamentals. Great positions on all three graphs. More so with the pound. That's why I want to take a look at pound crosses. Pound yen, another very interesting pair. Same process, we draw out to see where it is in relation to its past. Remember, one of the postulates of Dow, the creator of the Dow Jones Industrial Average, is that history repeats itself. Now this huge tail down at the bottom doesn't help us much. And as our webinars progress, they're going to get progressively harder. We're going to do a lot more technical drawings, and they're going to be pre-prepared. Right now we're going with the news that we have and the things that I really want to get across to you guys. So once again, with the pound yen, we're at a critical support level, resistance level. We have already touched it and withdrew back. A very concrete trade idea doesn't come about from this, so we'll go through the list of what else happened over the weekend and what we can expect in the week ahead. So crude oil and the Canadian dollar. So they're being compared percentage-wise. The thing that I wanted to get across to you guys, the result that we had from the crude oil fall was enough to draw a reversal pattern, not more. There hasn't been follow through, and there hasn't been enough conviction with the bulls that we are ready to climb back up. Now the Canadian dollar is also showing us a similar picture. But we have beaten and returned back to an upward trend, and this looks like a reversal figure to me. So on your radars, on your screens, I would definitely watch this and seeing from what kind of news that we have coming out. If there's nothing related to oil, I would even short the Canadian dollar just due to the weakness of the US dollar. So dollar CAD is definitely one of those trades where you can fade US dollar strength. And one more asset that I wanted to discuss with you guys is gold. Now this figure that we just drew here, this is called a flag, perfect flag. See how it's symmetrical? Doesn't look like a dead fish. It dropped down a little bit, and this final candle of moving up is a really good signal that it's an actual bear pattern. Sorry, not bear pattern, flag pattern. This usually results in movement in the direction of the original impulse. Let me pull up some volume up here for you guys so you can take a look. Very, very important. So volume has been decreasing, but this is on FXCM brokers. So this isn't the futures, gold futures. Yeah, see, they're CFD contracts. I would like some futures for gold. Beautiful. Well, compared to this is only since January. So if we take a look at this area here, if you take a look at these here, this is quite a large volume gap. It's the biggest that we had all year, and that was, oops, that was today. So today's movement in gold is pretty high up. In when everything is correlated, coagulated, the flag pattern looks very solid. You can buy from the bottom of the flag pattern, or you can buy a breakout. So either one of these levels, you can buy from somewhere down here, or if we break out of this level yet again, that can also be an indicator to buy. Now, the major investment firms in the United States give gold somewhere between 1,300, so 1,300 and 1,400 over the course of the year. So obviously gold will oscillate depending on the role that it's playing right now. And in this instance, gold is playing a safe haven because investors don't know what to make of Trump's government shutdown. We're not sure what's happening with Brexit, and there's a bit of turmoil in Europe. So that's crude oil. We take a look at the Canadian dollar and gold. Another issue that I really wanted to discuss with you guys is emerging markets. Emerging markets are all countries that have recently became a free market country. So they have their own stock market, obviously their own currency. And the most interesting countries to us are Brazil, Indonesia, China, India. The least interesting in us as speculators, I mean, this is something that you could short, would be the Mexican peso. They're really having difficulties with the fall of oil, and also with the situation with Trump, because they don't know what's going to happen. And I remember Trump, when he was first being inaugurated, he said, "I'm going to make Mexico pay for it themselves." And a lot of Wall Street firms are putting a lot of money into emerging markets, because the rate of growth of GDP is slowing down all over the world. Like in the US, you can expect 2.2% GDP growth. In countries like Japan, it can be 1.5. And let's talk about the results that you can expect from investing in the US stock market. Now, in the beginning of the year, we're expecting a bearish trend, but there is in the middle of the year, there's going to be a new government bond issuance, and that's going to tighten up the US dollar. In general, there's two ways that the US economy can go. First, they can go, the way that they're planning right now is a very dovish stance, raising interest rates twice. That's going to keep the dollar flat, and that's going to be very good for emerging markets. So very good for a lot of, well, as they say, Wall Street firms that have invested into currencies, stocks, and bonds of the countries that I mentioned before. The other way they can go, and now that's bad for their stock market. If they don't continue to raise rates, the stock market will fall. So the second way they can go is a bit more aggressively increase the interest rate 3 times. The dollar will rise, the stock market will rise as well, but that kind of effect will be detrimental to emerging markets who have a lot of government debt in US dollars, and commodities, which are also traded in US dollars. And that's another thing heavily impacted by the relationship between China and the US. That's the last kind of fundamental topic I wanted to discuss before we dive into some technical tools that will help you with your trading. The situation between US and China is very, it's worldwide. I mean, exports from Europe, from Australia, from Asian countries are heavily influenced by what's going on. And most of all, commodity prices jump with new advances in their debates. We at Olymp Trade believe that if everything can be resolved peacefully, if everything can be resolved with both parties winning, that would be best for world growth. Emerging markets will grow, as well as both local markets can continue to thrive. China is the world's biggest importer of raw goods. So if their growth shutters and stutters even more than it has already, it'll be really bad for emerging markets, and that'll play out with the rest of the world. The US can't float the bill alone. Now let's get into some really cool, fun tools. So I wanted to tell you about the Olymp Trade platform, some of the cool things that we have. First of all, everybody knows about the economic calendar, but did you know that you have your own personal chart set, your own personal chart analysis tools? So here you go. You click indicators in the upper right hand corner. Scroll all the way down to the bottom, and then holding down Control, you can click Technical Analysis, and out will pop open a new window. In this new window, you have your own chart that you can change, and you can add all sorts of things. You can add indicators, you can add lines, and you can add channels. I think this is a great tool because if you follow some of my work, a lot of it will be done on graphs, and you can copy my graphs onto your own graphs and have that when you're looking for trade ideas. As we progress in the webinar series, I'll have a lot more interesting information for you guys. So stick tight, and we'll use different sites to get the best edge that we can in the market. Now, the second thing that I wanted to show you was a comparison. So in the beginning of the webinar, I had this screen open. This is the dollar index. So basically it's a basket of the top currencies in the world, but they are weighted. So euro has the biggest weight in this equation. So what I'm going to teach you guys right now is a way to have them be equally weighted, which is very important. So here at the top, this is TradingView. It's a free software service that allows you to chart. We open up a bracket and write in USD euro because that's the first currency that we want to weigh. Then we add that to the Japanese yen, and remember we got to divide the Japanese yen by 100 because it's 100 Japanese yen per $1. Then we add USD Great Britain pound. Then we add the dollar CAD. Then we add the dollar Aussie. Who else are we missing? The dollar Aussie. I personally don't trade the franc, but we can add the dollar franc to see how the dollar is doing in comparison to all the other currencies. Now we add all that up. How many is that? We got 1, 2, 3, 4, 5, 6. You could also put in the New Zealand dollar, but they're very correlated to the Australian dollar, so we don't do that. Oops, divided by 6. Boom, and here we have a more precise dollar index. In our previous lesson, I showed you guys how to do that with your favorite FANG stocks, where we added up and divided the top tech stocks that gave the best return on investment over the past 10 years. Save this graph. You can see that the US dollar has broken support levels. It made a weak attempt at previous highs, didn't make it, and as soon as Trump declared that the government shutdown is off, the dollar tanked again. So today we are showing a doji candle, which means the market is uncertain. That's what Mondays are for. Mondays are for strategic planning, scoping out the environment, putting in goals, putting in levels. So I think the dollar is going to continue falling. If you guys have some of your trades that you're looking for dollar strength, be wary. If you are going to be fading the dollar, some good currencies to do that would be dollar yen. Same continuation pattern. Australian dollar. Here I don't see that picture because it is tied to commodities. The Australian dollar is very correlated to commodities. We don't have the same picture. But what about dollar franc? This also looks like a trade where we are not going to be going up. All right. If you guys have any questions, go ahead and write them in chat. We're going to be finishing soon. We're just going to go over the economic calendar. Lots of stuff to discuss. So I'm sure you guys know that you can click the filter, choose which countries are important. I like to look at the top 7 countries because their currencies are the most liquid and the news are the most reliable. So if I don't choose your country in this analysis, please write it in chat and we'll have a look and then we can discuss it together. So like I said, today in about, well, actually already they've been speaking. So just so you know, Bloomberg Live, let me show you this real quick. Bloomberg.com, .com/live gives you a live broadcast of whatever the event is going on. So here we can choose Europe if we want to look at Draghi. Actually, Europe would be where Draghi and Carney both speak. But here you can get their live speeches also from their respective banks. Europa. So you can also find here you go, press conferences. You can also find their press conferences here on their official websites. In case you missed one, it's usually best to watch them live instead of football. Grab some popcorn and watch how Mario Draghi discusses. So on Tuesday, the most interesting things is the UK Parliament vote on the Brexit deal. They're going to be voting on how to go about a soft Brexit. Like I said, everybody is very involved in trying to get the most smoothest transition. Basically, they want the best deals. They want the best deals to keep in play the trade agreements that they had between the two countries. That's going to be... but they're also voting on the border between Scotland and Great Britain. Basically, they want independence. Scotland wants to stay in the European Union. That's not an option because they belong together as one country. That's what Great Britain feels like. So a lot of these other things aren't really going to be market moving. Here we go, consumer price index in Australia, that's going to be moving. And the Australian graph looks really good. Like that's a pretty standard like downward movement over the course of a year. It'll be good to watch what happens, and if nothing happens, I would even enter a short down to 170, 169 maybe even. So keep an eye out for that. And of course, on Friday we have non-farm payrolls. That's right, NFP is coming out this week. So from ADP, you can get a lot of forward guidance. You can tell what might happen and how much different the numbers might be. If there's a surprise in ADP, you better believe that there's going to be a surprise on non-farms. And GDP for the year is also coming out for the US. Very important number. Like I said, growth is slowing in the whole entire world. The fact that growth is slowing this much in the US is a huge indicator. 2019 is going to be a lot more slower. Earnings this season, if you have been watching earnings, they're coming up short. Top Sectors are healthcare, tech, finance. Healthcare, finance, and tech. The worst are construction companies. Construction companies and consumer consumer goods like luxury items. Those are all falling, which is an indicator of slowing of economy. There is no recession this year, but there definitely is going to be a slowdown. It'll be a good time to practice trading within a flat. And I'll make sure to have some of those strategies ready for you. Come back on Wednesday, Awesome Strategy Wednesday, where we will discuss new strategies within the current environment that we're in. Crude oil inventories also, there has been a huge stockpile of inventory in the past few reports. A lot of companies have been going full steam ahead. In order for a US drilling company to make profits, oil has to be around 65, 60, I believe. So around $60 crude, WTI crude. So they've been really pumping it at full steam. If oil stays at current prices, some of that might get shut down, but I think my prognosis for oil would be about 60 to 50 in the first half of the year. We're staying in that flat area. Interest rate decision. Also, this is actually going to be a really big day, Wednesday. I'm glad. So we together will have an opportunity to discuss these things. Please be there for the webinar. We're going to talk about oil inventories, the FOMC statement, and we're going to talk about the Fed interest rate decision. After our webinar, I'm going to be sitting there with a big old ball of popcorn, and I'm going to be listening to what Jerome Powell has to say. We will get guidance on their plans for the year, so expect strong volatility. And if you trade options here with a limp trade, you have a great chance to make some plays on the volatility. I would even go not with the options platform, but with the Forex platform. The reason being is that you can cancel trades, or sorry, not cancel, but close trades in the moment, I think, which is pretty important. Oops. Pretty important. So Wednesday, really big day for us, guys. Thursday, we have Chinese manufacturing. PMI is the Purchasing Managers Index. Basically, they go around to the top companies that produce things. They talk to their procurement officers, and they get data. So this is basically a report, you know, on a it's not mandatory, but it gives us an insight onto how production is in the country. German unemployment seems to be falling. GDP for Canada in November is coming out on Thursday. Caixin manufacturing PMI. So perfect. At the end of the week, we get to see a lot of how production really is going on in the world. Remember, the less production, the less demand for commodities, and obviously they fall. The more production, the more prognosed demand for commodities, the higher they will be. Now, my list of commodities to watch for, let's see if we have them on the Olymp Trade platform. So gold and silver, they are going to grow this year, guaranteed, but not by much. It's going to be very how would you say, it's going to be very reserved. Gold might travel $100 in price. All depends on geopolitical conflicts with different countries, trade wars, and Federal Reserve inclination to be hawkish or dovish. So perfect, copper and platinum. Let's take a look at these. Natural gas. NG is natural gas for those that don't know. So yeah, pretty hard to look at. Looks all about the same. It's really hard to tell. I'll make sure to do a little bit more research, a lot more research into commodities. I'll tell you what I'm looking for. So my speculative ideas for the coming week ahead are going to be emerging market currencies, anything tied to the dollar and what the heck is going on with the dollar. Also, I'll be watching the European and British speeches and their monetary policies. Commodities. So commodities, emerging markets, euro, pound, dollar. Those 5 assets are going to be on my watch list. Come back tomorrow. We have awesome tradable trend Tuesday. Basically, we'll be finding out what is trending, what is moving, and where can we get in. We might even do some live trading. So if you like this video, if you found something interesting, or if you just enjoyed listening to me, please give us some thumbs up. Leave some commentary at the end of the video so we can understand what kind of things you guys like. Now I'm going to leave a few minutes for questions. Let's see what you guys got for me.